Hi and welcome back to Cheeky Crypto. First off, Happy New Year. It's a start of a new year. Could see some interesting things happen in 2022. Is this the year for new all-time highs with Bitcoin? Well, we're going to take a look at BTC in this video. We'll have a look at a few charts. We'll have a look at the weekly, daily and hourly, see what's going on with Bitcoin and what might actually happen next in the short term and what we think is actually likely to happen slightly longer term as well. As we get into this video, if you find it useful and informative, hit the like button. Really do appreciate that. If you happen to be new to the channel, make sure you subscribe, tap the bell, select all notifications, and in doing so you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. Right, with all that said, done and out of the way, let's jump on down into the desktop and take a look at what's going on here with Bitcoin. Okay guys, so here we are with our hourly view. I thought I'd mix this up a little bit and we'll start with the here and the now. What's happening right this second, this hour, and then we'll progress up to the bigger picture, which is really important. Normally we start with the bigger picture, but I feel that sometimes people aren't actually waiting to see what happens at the end and they think everything's great and actually there's some downside potentially on the horizon before we actually get to the bigger picture, which is it takes months to kind of play out, right? So what we're going to do is we're going to pay attention to the hourly here, right? So we can see that we had the ABC. Our expectation was to come down to 46k, and you can see that we came down just short of that 46k range with this wick here. So again, that completed that move. And to the downside, again, you can see and acknowledge this is a relatively biggish move. You can definitely see that we had that area of resistance just forming up here at about 48k, pulled us down into that lower range, completing that bigger ABC. Now, we're not going to draw out all the micro movements, but as you can see, this C wave is actually just down here, and it was the measurement of our A wave to get into that area. So if you're not familiar with Elliott wave theory, definitely do some research on it, guys, because everything seems to just resonate well. You can just take a look at this. My charts are messy because we are actively looking at these wave counts, right? So we can acknowledge that this is a wave C to the downside. This means that you end up with the reversal pushing us up to the upside. And here we obviously have our wave A, our wave B, and our wave C, completing that. Now looking for that corrective action to the downside. Here is your wave A, this is your wave B. We are expecting a wave C down. And again, we can measure this out, and we'll take the low area of our A wave up to the high area of our A wave, and we'll measure this with the fib down to this area here. We can see the 1-to-1 ratio. This actually puts the C wave down at $44,500, or to be more specific, it's approximately 44,649. Okay, so that's the expectation. Now, taking a look at the Stochastic Rsi, we can see that we have got room to pull back. Okay, so again, this is sensitive to price movement, so we know that there is room now to pull back down into this potential lower range. Now, there's no guarantee that you always hit a 1-to-1 ratio, but it's the most probable area, and there's a difference here between what is possible and what is probable. It's most probable that we'll come down to the 1-to-1 ratio. Sometimes, though, you actually find that these key fib areas, such as the 618, the 786, actually hold up really well for support, so you might actually find a C wave being shorter. Now, the C wave could also go down to the 1.382. If it goes past 1.382, that's actually no longer an ABC, but instead it turns itself into a 1 through 5. Okay, meaning there's an additional 2 waves to the downside, or one up, then another one down, right? So if the C wave gets extended down lower than 43,500, then we'd be expecting this to be an impulsive wave down, and therefore we have the bounce and then an additional wave to the downside to come in. Okay, so we don't measure that until that time actually comes. The most probable outcome is a 1-to-1 ratio. A wave always kind of stereotypically equals the same as the C wave in terms of distance, which is why we use the fib. If we actually go down to the 1.618, which is another key area, that's usually, if we do go impulsive, that's where you're going to find a bounce to the upside from there, which will be the 4th wave going down into the 5th wave. Again, just because we go above this area, it usually leads to a 1, 2, 3, 4, 5 wave count, but there's no guarantee of it either. Sometimes it doesn't actually do that. So it's important that we wait for that 4th wave. We analyze the additional indicators to see whether or not we are going to get the 5th wave down, or whether it actually just starts to get recovery. But for the most part, the most probable outcome, if you go past the 1.382, is an impulsive move down. Okay, so now we have an understanding of what's going on right now. We're expecting down trend to occur here with Bitcoin. Okay, this is probably going to take a couple of days, kind of work its way through the weekend, maybe into Monday. And then after this, we should be looking for an ABC move up or an impulsive move up, depending on how the markets are feeling at the time. New year after all, new books. Interesting to see how things kind of play out. So obviously, this is really interesting news. It means that if you're shorting, you should be looking forward to some gains. If you're going long, you might want to really consider what's going to happen next year and maybe not use leverage. Obviously, I'm not a financial advisor. I cannot give you financial advice. And this is just what I kind of do. I buy and sell assets that I own 100%. I don't use leverage or anything like that. So as you can see, downtrend is here, and we could potentially see that one come out, and then we should look for a move to the upside. Now, this is short time frames. Okay, this is not long time frames. It's not the daily chart. It's not the weekly chart. This is what's going to happen probably in the next 24 to 48 hours, and then we'll get the reversal to the upside. So if we're talking slightly longer term, which we'd like to do on this channel, we have our daily chart. Now, our daily chart does show us a few additional things. Obviously, we have that ABC to the downside right now. We kind of see that on the hourly chart. Again, doesn't actually make up too much difference here on our daily, right? Our hourly is kind of really small micro movements in comparison. Now, obviously, we have the head and shoulder pattern here on our daily chart. Now, for the most part, this is potentially, a little alarming because I actually thought this was going to go higher, and we seem to find some interesting kind of resistance right here. And if that is the shoulder just falling here and actually being quite shallow, and we actually have an impulsive move down, then we could potentially break this neckline and go much shorter. If we do that, then I do think that's going to put us into a pretty bearish scenario for 2022, at least the Q1. I don't think this is actually going to happen. I think this whole pattern here is actually starting to deviate away, as the shoulder shouldn't really be that shallow, and the expectation was to bounce up towards that 58k area. And I'll go through what's going on there in a moment. The other thing that's really important about this daily chart that's really worth noting is that we were overbought when we were up into this resistance zone just here, and now we're almost all the way down in this oversold area. After that latest C wave gets corrected on our hourly chart, that's going to put us back down in this oversold area on our Stochastic Rsi with Bitcoin on the daily. This is really good news because this means that we finally have consensus between our hourly chart, our daily chart, and our weekly chart, which I'll go to now. So as we start to talk about bigger picture, it's really important that we understand, that we are heavily oversold on our weekly. We've been waiting for our daily to come down to the oversold area, which is where it is going to be right now over the next couple of days. It's probably going to end up concreted into that oversold area on our stochastic, which will also allow us to see our hourly with that C wave that I was talking about at the beginning of this video to come in to take us into the oversold area. Once we have all three of these things aligned, that's going to potentially be what takes us up to these areas where we do expect to see some downtrend. Okay, so from there we are looking for 58k or 60 or 63. One of these three areas are kind of my expectations in terms of reversal. So a good example of a strategy might be that if you're in Bitcoin and you're riding it up to the 58k area, you sell 58k, and if you close above that 786, you buy back in, meaning that there's actually room to continue growth, maybe up to the all-time high of 85k. If, however, you sell up here and actually, you get rejected from the 786, then you kind of expect yourself to pull back down and you protect yourself from potential losses, right? That's one strategy to kind of play out here. Alternatively, you can use lots of different stop losses, etc. But again, I find those higher risks specifically with Bitcoin and the manipulation that's going on with BTC. So ultimately, I don't tend to do these things too much in terms of stop losses, etc. Like I said, I own the asset, I analyze the market frequently, and I make a decision based on whether I think actually we should be exiting out of position, either long term or short term, and then buy back cheaper or etc. Right? So for me right now, Bitcoin's actually looking pretty good for a good push to the upside. And again, there's no guarantee of rejection from this point. Okay, it's just what I do think is most probable. I think there's a most probable area of rejection is going to be right in here with the 618, the 702, the 786 area of the Fibonacci retracement tool. And this is actually running from the all-time high of 69k down to that low area that we had set here at $42,000, right? So when we take that fib retracement, we're looking for the bounce up to that 618 and before potentially going down to lower lows, right? That's a bearish kind of outlook, but it's a possibility that we should acknowledge. Likewise, we could potentially just continue that right to the upside, but we are looking for a closed candle above 786 to confirm that. If we cannot close a candle above the 786, then actually I think, yeah, you're probably more than likely going to end up to setting a lower low, right? Rejection from this area tends to lead to this. There's also no guarantee of that either, because like I said in previous Bitcoin videos, this is kind of a little bit, it's been set up in such a way that you could read it in multiple different ways. You have an ABC coming down, which is fine. This then makes you think actually you might end up with an ABC to the upside, right? And this ABC might be here, A, B, and then we push up into that C wave, okay, trying to take us to the 618. Alternatively, this could also be an A wave, this could be our B wave, and we could be looking for a C wave down, right? So it is kind of two ways to look at it, and it really depends on whether you feel bullish or bearish. And when we actually take a look at the Stochastic RSI, it makes me believe that actually we are not likely to see the lower lows get set, but instead we are likely to continue pushing up higher. But that being said, we should acknowledge it's a possibility that actually we could come down into those lower lows, and therefore managing our expectations around this high area of a bounce zone of the 618, the 702, the 786 is the most logical thing to do, in my opinion. So therefore, managing our positions with Bitcoin, or potentially even the altcoins, because they'll be following the same patterns to a degree, and riding it up into this area here for that 786 or the 618, and then see a pullback. There will be a pullback here in both of those scenarios. We'll either have a small ABC correction or we'll have a big C wave correction. Okay, and we'll be managing that expectation. We'll know about it as soon as we print the A wave. We'll have a pretty good idea as to what is going on here. So for now, it's not 100% very clear. It can go up, it can go down. I get called out for this all the time. But if you do break a certain point, if you do get a closed candle above that 786, you're going up. Fantastic. Jump back in, ride it, right? Because you're going to be going up significantly higher at that point, right? You're going to go at least higher than you were previously, right? And that's kind of the pattern that forms out here. Specifically, if you follow this as an impulsive move to the upside, because if this actually turns out to being, a wave one, this a wave two, and we actually go impulsive here and get that closed candle, you're going to be riding this nicely to the upside, okay, where you'll be looking at potentially 85k or so. So again, you'll be able to ride that knowing depending on what's going on with those indicators, right? So right for now, we want to be managing our risk in the market. We want to be monitoring the 618 area to the 786. If we get rejected here, make sure that you're not exposed to that downside. And then obviously once that kind of pulls back, potentially jumping back in, waiting for that closed candle, getting the confirmation above that 786 zone, and then obviously jump back in and off the way you go, to riding those waves much, much higher. It's all about risk management to a degree. And obviously when you have a market like this that can be read in multiple different ways, almost by design, I will add, it can lead people to going long, it could lead people going short. And arguably, it's not very conclusive as to which way it's going to go. I feel that the whales are going to dictate which way this goes on the amount of money that is either going short or going long. Okay, whichever one that they feel that's going to maximize their gains, that's probably the direction that it's going to go in. And we won't know that until we get into this area here of the 618, the 786. So I really wanted to kind of highlight that on the bigger picture. On the smaller time frame, we were expecting the kind of downside in the next couple of days, just to get us into the completion with that C wave, and then obviously we'll be looking to move back up again. It can happen very quickly. Timing's always the hardest thing to gauge, but as a part of the bigger picture, we can obviously see that we've got a steady rise now up towards that kind of 58k area. And once that kind of comes in, we'll be looking to see some more downside, in my opinion. Although I would love it to actually go ahead and click close candle above the 786. So guys, I'm going to leave the video there. Hopefully this was a nice brief update on Bitcoin, so you're understanding as to what I'm kind of seeing inside the charts. If you have found it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then do go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With this said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.